What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to cover some other notable names on the market, such as Tesla, Apple, Amazon, AMD, and NVDA. So if you saw what happened on the market today to start off the year, you know it was kind of a bloody day. I believe healthcare was the only sector that stood out, along with the financial sector, with Bank of America and JPM leading the way. Other than that, most of technology stocks pulled back unexpectedly, and many people were taken by surprise. SPY broke below its 10-day moving average for the first time since we broke back above it in October, so this is the first time that we're trading fully below this blue line, which has managed to be a support for SPY throughout its multi-month rally. So now that we are below this 10-day moving average, many people are wondering if we're going to fall towards our next support, which would be at the 20-day moving average, which is currently trading at 468. Looking at SPY on the shorter term candles, here we're looking at the hourly chart, we can see that SPY did break below its healthy bullish range, in which what we consider to be the healthiest bullish range, and it came down to a low of 470.40 today to start off the week before reversing higher to end the day. So now that we know that 470.40 is a major reversal point, we have another support placed at that point, and if we break below it, we do expect SPY to fall towards its 20-day moving average on the daily chart, and below that point it could break below 467, and we don't see much support below that till 464 and then till 460. Keep in mind, the biggest reason that SPY fell today was because of Apple's strong pullback. Apple was downgraded to start off the year, and unfortunately that caused an entire technology sector pullback. You got to remember that Apple holds a lot of weight in the market, and so anytime Apple gets downgraded or any bad news comes out about Apple, it turns to move the entire market down or up with it. And so Apple is now trading below its 50-day moving average, and that yellow line right there, which is the 50-day moving average, is very significant because this is the line that institutional traders and Wall Street uses to gauge whether a stock is currently in an uptrend or in a downtrend. You can see that as soon as Apple broke above that 50-day moving average back in November of 2023, it went on to rally for weeks after, and now that it's trading back below it, it's going to be very risky if it doesn't recover back above that point very quickly. So every day when you open up the market, the first thing you should look at, especially if you're looking at Apple, is go to the daily chart and see where that daily candle opened in relation to that 50-day moving average, and then at the end of each trading day, you should be looking to see where it closed in relation to that 50-day moving average. If you are a moving average trader and not a charts trader or a levels trader, the next available moving average support you have is going to be right around 182.25. But let's zoom into Apple on the hourly chart to see what levels we can take away from the chart when we're looking at its hourly candles. Here we can see that Apple entered the bearish territory that we have selected for it. The reason why we have this in red is because we can see that when we look back at Apple's consolidation throughout December, Apple spent a few days consolidating between that 187 to 192 mark, and now that it is below this consolidation range, all these buyers are not going to be too happy that it broke below. You can see that it attempted that recovery in the morning, however, it was not strong enough. So as long as it's below that 187.40 mark, we are leaning more bearish than we are bullish on Apple. In fact, throughout 2024, we do expect Apple to continue its pullback, and we expect Microsoft to take over as the most valuable company. But we'll talk about that, and we will trade that as it develops within our group. If you are not part of our group, make sure you check out the link in the description. If you are looking at Apple for further downside movement throughout the week, you want to break below 181.60 for a further fall towards 178. Again, we do not see much support for Apple below these levels. You can see that this move was pretty vertical, so the move down can be vertical as well, hence why it dropped so much today. If you are bullish on Apple, you need the stock to be back above that 192 mark, and then it needs to move back above that 195.45 mark for it to regain full bullish confidence. Anywhere below that point, confidence is shot, and it may turn down for further downside from there. Before we jump into the next stock on our watch list, let's talk about some things that are happening this week. First things first, we have the minutes report. So if you are looking at what's happening this week, The first thing you want to focus on is that minutes report, which is expected to be released tomorrow. Although the minutes report doesn't really usually bring new information, it still has some kind of effect on the market. You got to remember that in general, people are always scared of any time the Fed is going to speak or release any reports. And so since they will be releasing their minutes report, and the minutes report will give us details about how each of the members felt in their last meeting, how they feel about interest rates, what's their timeline to raise or lower interest rates. So the market is likely to face some uncertainty until that report comes out, and then the follow through after that report will be dependent on what that report states. Other than the minutes report this week, we also have the U.S. unemployment report for December that's coming on Friday. Unemployment is currently right around that 3.7% mark, and so people and traders, investors want to see it maintained below 4%. If we start moving too high, then it may be a bad sign for our economy. The next stock on our watches is going to be Amazon. On the daily chart, Amazon also broke below its 10-day moving average. We're going to see that same kind of trend happening throughout the technology sector, and it closed right at that 20-day moving average. And so if you are looking at the daily chart for Amazon, the first thing you should look at every morning is where did the daily candle open in relation to the 10 and 20-day moving averages. You can see that Amazon here fought the 10-day and the 20-day moving average for quite some time before pushing higher. But even on that push higher, it did not gain enough volume or traction. And the fact that it is back below this breakout or right back at this breakout is a little bit of a cautionary sign. And so we really want to focus on where it's going to be in relation to that 10 and 20-day moving average throughout this entire week. If it can't hold 150, Amazon is likely going to come down towards 143. But here are some shorter term candles or levels to focus on. First things first, we have a support at 148.40. If Amazon breaks below that support, it will re-enter this consolidation range that it spent weeks to break out of. That's not a good sign for buyers, and buyers are likely going to let go of that position down towards 145. Below 145.40, our downside price target is going to be right around 142.80. To the bullish side, we are bullish on Amazon above that 150 mark, but we won't be fully confident until it moves back above the 152.60 mark. If it does move back above that point, we would consider calls again, and we would ride them towards 156 to 158. The next stock on our watches is going to be AMD. AMD had a massive pullback today. AMD has been one of the biggest winners on the market throughout the last few weeks. And so it was only a matter of time before people started taking some profits. This profit taking was very strong. It brought it below its 10-day moving average, which it has been using as a support for the last few weeks. Now that it is below this line, the next available support is going to be right around that 20-day moving average of 135.85. But let's go ahead and talk about some shorter term levels to focus on for AMD. We have a resistance to start us off at 143.40. If you are bullish, you need AMD back above that level to regain full bullish confidence. But nonetheless, it is still bullish anywhere above 135.30. We do consider anything above that 20-day moving average to still be bullish. If it breaks below 135.30, it has a few more supports before it enters bearish territory, which would be below 126.70. This is an aggressive downside price target. We don't expect AMD to hit it this week, so make sure you're checking back into our future videos so we can update you on all these levels. Last but not least, the final stock on our watch list is going to be NVDA. Everybody expected NVIDIA to be pushing right now, especially after Nancy Pelosi's comments to enter NVIDIA calls or the release of her trade record. However, NVIDIA failed and it did not break above 500. In fact, it didn't even see 500 before pulling back throughout the last week. Now NVIDIA could be building a bearish flag here to end the day today, but here are some levels to focus on for NVIDIA. Specifically, the next available support is going to be 473.95. We do not see much support below that level. It can be a very steep downfall towards 449, so make sure you look out for that level going into the rest of the week. In terms of resistance points, NVIDIA does have a little bit of resistance points between 473.95 and 509, but we're not really going to count them primarily because this is a very large range, and no matter what happens within it, we're not considering this a breakout until NVIDIA gets above 509.17. So yes, it is still in a bullish range. However, we do not expect a breakout or any large upside movements till it's above 509.17. Support is 473.95. We could argue that there are supports right around 457 or 460, but ultimately the strongest support is going to be where this reversal came in, which was at 449. A break below that can take it to 437, and a break below that has a target of 424. Again, these are very aggressive downside price targets. Make sure you're checking back in so we can update you on all these levels. Thank you guys so much for checking in. I hope you found this video helpful, and best of luck.